Welcome back to part 2 of this closing bell on the 10th of November 2020 on the Tuesday. So as you can see, all the FANG stocks, the hyper-growth stocks, all the nice technological disruptive sector or the COVID-19 stay-at-home stocks are all being battered. They've been losing value. I cannot speak about all of them, but I speak about the ones that I speak regularly, that I buy, I venture in, and most of you that follow me will also perhaps bought these stocks. But what do you do with it? So I'm dividing into 5 groups here. So the first one I'm going to speak about my freelance economy, my favorite ones, Fiverr and Upwork. Okay, so Fiverr has dropped all the way to 138 from the highs of the 187. Dropped a lot, 138. So people who bought high could have lost a lot of money. They're thinking, what do I do? And also Upwork, they hit the high about 30, they dropped to 27. So what have I done? I still believe in freelance economy, okay? But it comes to a point in time when the stocks are rotating. I cannot focus on both of them. My money, I need to start consolidating. I need to start focusing one. So today I've taken profit of Upwork. Okay, so I've sold all of Upwork at 27. I could have sold at 30, but I missed it. About 27, 28. So I was selling in stages. 27, 28. I've taken a lot of profits because I was averaging about 16, 17. Taking lots of profit, and I'm preparing to reinvest in Fiverr. So I believe more in Fiverr because Fiverr is a bit more streamlined, lower cost, it's built in Israel, the technology is a lot higher, it's more international expansion. I see lots of room for growth. We're not going to see Fiverr exploding after this rotational stock, after recovery, but people will still be using stay at home to work. The guys in Indonesia, think about a third world country that's got really high skilled people that still need to find a job to serve countries in the West. So Fiverr is still prevalent. I still like them. I still see lots of room for expansion. It doesn't change their business. It doesn't change their growth strategy. So for me, going Fiverr, I like Upwork, but I have to choose one child. Sounds really bad. So next one is between Square and PayPal. I like e-commerce. Okay, I've got Square, PayPal, and Agent. So Agent, I've decided to get rid of because they don't play the cryptocurrency banner. Cryptocurrency will be playing a huge role in 2021 onwards. So I've got Square in my personal huge account. I've got the likes of PayPal in my trading 212 and also my eToro. So because they're great value, I buy them on the dip. So I've been accumulating Square and PayPal. Do I choose one? I think I might keep both because for value, for better growth, I think Square would be. Well, PayPal has still got loads of potential, but in terms of multiple growths, I think Square still has potential to go 300, maybe not in 2 years, but maybe 5 to 7 years. So they've got great multiples growth in that company. We are still going to be using cashless transaction to buy stuff. I hope that they're going to start using Venmo and also Cash App even more, that start to rely less on Visa and also MasterCard. So that's the way, I think that's where the future is. That's where the millennials will be going, Really, do we really still need Master and Visa? We want to cut the cost and, make sure that the smaller business people on the other end make more money out of the less transactional fee. So Square and PayPal, cryptocurrency play, I still like them. So it's one of those, I'll buy on the dip. If they dip lower, I'll buy it because it's a company that will disrupt the banks, and I like that. Okay, next one, e-commerce. We've got Amazon and we've got Baba. Amazon has dropped to about 3,000. They were highs at 3,005, they're at 3,000. I did sell some Amazon off, about 3 to 4 Amazon stocks. I took profit because I bought them about 2,890, so I took some profit off. Amazon's got a lot of scandals just now with EU trying to catch them out on their taxation and also anti-probe privacy. And Baba, because of the Ant and Jack Ma pissing off the government, they dropped to 267 just now. I'm still buying Baba, by the way. So I've sold Amazon, I'm starting to buy Baba. I think it's better value in there. There's plenty of Southeast Asia play, plenty of competition against SEA, and plenty of financial app challenge. Hopefully Ant Financial eventually gets IPO. And Baba might break through the 300. So to me, Amazon, Baba has got more chance of growth from 800 billion to perhaps 1 trillion. But Amazon, I'm not sure how fast they can go. I still like Amazon. It's painful. I still hold them. But if I need to release equity, I might sell Amazon for more Baba. But that's where I am on e-commerce. I'm not going to the likes of eBay or Etsy or anything anymore, or Shopify. I'm going to focus on Baba. And the next one, number 4, Semiconductor. Alex will always have semiconductor stocks. Alex will always own his top 3 stocks, Semiconductor. So it's AMD and Nvidia. It's hard to choose between the two. I hold Nvidia in my personal portfolio and my AMD in my eToro and Trading 212. I like both of them, and AMD is only 100 billion. I can see in the future when I'm retired at 50, 60, I see AMD is a $1 trillion, $2 trillion company. Nvidia, it's about 300 billion. I can see Nvidia hitting 1 trillion once all these 5Gs and all the self-driving cars by 2030. I'm not surprised. So there's room for 3 multiples for Nvidia here, and there's room for 5 multiples for AMD here. So I'm going to keep on them, and I'm going to start buying them low. This is something that I don't worry about. If they drop, fine, they drop. I'll start buying them. I start dollar cost averaging them down. It's a sector that I'm going to keep. And finally, the fifth one, Tesla. Okay, I spoke about NIO. I pissed a lot of people off when I said sell NIO off. All the fanboys are not happy. It's not my problem. I'm just telling you the truth. Tesla, I like Tesla. I still like Elon Musk. I still believe there's a $2 trillion company in the next 5 to 7 years with the battery plant, solar panel, space, Starlink, plenty of room to grow. So they dropped to about 398 today, and I'm trying to buy more Tesla. I'm trying to rake in, buy more Tesla as I can, because end of the day, electric vehicles is changing the face of the changing our battery EV, the way we look at electric storage, the way we look at solar power storage. And with a great CEO like Elon Musk, it's really nowhere else that we can go to seek for this great value growth. So Tesla is another one that I will buy. It's dipping, and who knows, it might dip to 350. So if I've got any more money left, I'll still buy. I'm always buying the try and stop. So my strategy for all this is, for these 5 key sectors, I've not spoken about the others, maybe I've not even considered them, but these 5 key ones are the one I'm considering. I'm going to start building more and more volumes, buying more. I'm not afraid to buy on the dip. But also on the recovery, like I mentioned, I'm looking closely at McDonald's and Nike, and maybe go into more Berkshire Hathaway. But I'm slowly trying to look at where areas of growth, just to balance my portfolio. But the overall objective for my portfolio, it's still growth. I'm focusing more growth than dividend. I'm trying to break the barrier of the 10-20% per year growth. I'm focusing on the compound annualized growth rate, CAGR. That's where I'm looking at, because end of the day, I want to retire early. End of the day, I want more time to do more stuff like this and not my 9-to-5 job. So this is me today. I've shared enough. This is where my views are, just to shine some light on what you guys might be thinking. So I hope you enjoyed it, like this one, and I've got a lot more to speak about portfolio construction and my views after this rotation. It's really changing my mind over the weekend, but this is the snippets I'm going to give to you just now. So have a good day, leave your comments below, and also press and smash the thumbs up button, and hopefully to see more of this video soon. Okay, take care, bye.